All right, good morning once again, and welcome to this webinar. Um, First of all, I'm really excited to have everyone on this call this um, Thursday morning. And it's our pleasure from Chef Life to be hosting this webinar today. I just want to know where you are tuning in from. In the comment section, you just want to type where you're tuning in from. I know from all the geopolitical zone in Nigeria, we have our presence there, and I believe that we have such presence also on the call. Please confirm you can hear me
Hello.
clearly. All right, thank you very much. Okay, I can't see any chats on the chat box. Where are you joining us from? You joining us from Lagos, from UK Lagos. I can see Zainab Musa joining us from Lagos. You're welcome. Where are the other persons joining us from? We have 39 persons on the call. Okay, we have Tankard Gimba joining from Abuja. We have Lagos. Okay, you want to represent your zone. You want to represent your state. Where you're joining from? Okay, we have Bamidele Kehinde from Ilorin, Kwara State. Okay. So we have the Southwest well represented. We have North Central well represented. Do we have people from the Southeast? Do we have people from the South? And do we have people from the Northwest and the Northeast? Please just type on the chat box and tell us where you're joining from. All right. Oh, we have Sapele Delta State. Amazing. Okay. So we have quite a number of persons on the call from different geopolitical zones. That tells you what we do, even in Chef Light. My name is Edewe Maviwe. I'm a pharmacist. I am the territory lead here in Delta. I work for Chef Life, and I'm the territory lead here in Delta State. We have other people joining us from Kaduna State. Amazing. Kaduna is a far away Kaduna. Yeah. Okay, we have Delta State, Asaba. Amazing. So as I was saying, my name is Edewe Maviwe. I'm a pharmacist by profession. I'm the territory lead here in Delta State. And for those of us who work, who are partners with Chef Life, you know what we do. And I believe that those of us who have not encountered Chef Life, maybe it's your first time being here, you will know more about Chef Life even by the end of this webinar. But this webinar is really not focused about Chef Life as it were. It's focused on the new tax laws. So let's talk tax. That's the reason for this webinar. We have amazing persons that are lined up to give us a talk and also to give us master classes. We have on our list our guest today, the person of Akeem Adekunjo. He's already on the call. He's been on the call from the inception when I joined the call. Amazing. And we have our internal experts. We have Moses Alagbaso on the call. We also have Natalie Hassan even on the call as well. So today we're going to be demystifying all it is about the new tax laws. And I know a lot of persons have been asking questions. Some of us have been reading. You've heard a lot. This is going to come into play as we come into the new year. And you are curious, what does it hold for my business? And because these tax laws, of course, there are things that are going to affect both small, they have significant effect on both the small, medium, and large enterprises and maybe companies even within Nigeria. So it is key for every business person that is wanting their growth and wanting to not be ignorant about what is going on in the country to be well educated. And that's the reason we set up this webinar for you. And we are doing this for free because as an add-on, knowing fully well that we have these businesses that are partnering with us, even in Chef Life. And we want you to be caught off guard. We want you to get into the new year and you run into issues because probably you were ignorant, probably you didn't know some things, and that's why we put this together today. And we are grateful that you took our invitation to heart and you have come for this webinar. Please stay put. Don't be distracted while the masterclass go on. I tell you that the guest speaker and our in-house tax experts, our accountants that are in the house are going to demystify a lot of things, are going to give you a lot of clarity about areas where probably you have doubts, you don't have a clear understanding of what the new tax laws hold. So right away, we're going to jump right in, and we will have our guests come up to talk through the tax law.
Yeah, good morning, everybody. I really want to appreciate.
So I would like to introduce you. I know you're eager to speak. You are well loaded to give us the webinar right now, but it is good that we give honor to whom honor is due. You paid your dues. We see your profile. We see the things you've done, and I would just like to read that so that whenever everyone is ready to receive, right? Okay, so meet our speaker. Our speaker, his name is Akeem Adekunjo, and is the managing partner at AA Tax Management Consultancy Service with extensive tax advisory and compliance experience. He has held key tax roles at Cobel Construction, Airtel Nigeria, ACS, and Ernst and Young. Akeem specializes in company corporation, M&A, sector-specific taxation, and key taxes such as PPT, WHT, VAT, CIT, and audits. He is a fellow of the Chartered Institute of Taxation of Nigeria, CITN. So let's welcome our guest speaker for today, Akeem, as he takes the floor. Thank you very much, sir.
Thank you, Cobel. I really want to appreciate Chef Life and for bringing this thing up. Like what he said, it's free, and I really appreciate them that at least they want to bring their partners on board to avoid any tax issue with the government. And from next year, a lot of things has been put in place. Like what we always tell some people that Tinubu, the president, he doesn't play with tax. That's why he appointed Mr. Taiwo Yedele, which everybody might know, is a tax expert also, to come and see how the tax can be managed. And a lot of things has been put in place. That's why you will notice that anything people want, they give it out. Oh, this thing is too much, all those things. They want to make sure that everybody is satisfied before they can now take a legal action from next year. And that's why they sit down and look like, how can we modify the tax that will be a benefit to companies and individuals? And I really appreciate, they did a lot of things, and there are some things that might cause a lot of issue if a mistake arises from maybe the employee or the employer or the company. And based on this, that's why we want to restrict ourselves to three things that affect companies and majorly individuals. There's a lot of changes in tax law when you talk about capital gain tax, stamp duties, federal revenue tax, so a lot of things, but not everything, but there's a lot of things that changes, which I think is going to be good for the companies and also the employee. Fine. There is nothing like, I'm just trying to give a brief, like, for example, now, if you are saying that, oh, the tax, employee tax is reduced, oh, maybe the higher people collecting higher money will be increased, or everything we still not have any changes to the complaint, because anything that the complaint will pay based on their employee, they are still going to be factoring into their cost. And the company will now shift it to the consumer. It's almost the same thing that I see. Like now, like what I said, in June 2026, the president signed the law, the tax law into the, the tax bill into the law. It now became act, which will commence in January 2026. Now, we want to look at the company income tax, the value-added tax, and the personal income tax, which I believe it is germane to everybody, whether you're a business owner, even though whether you're a small business owner, it is germane. What have they done? Before, we have different types of law, like, value-added tax, company income tax, stamp duties act, withholding tax regulation, and so on and so forth. What the government has done is this. They try to merge everything into 4 places. When we talk about Nigeria Tax Act, which I believe we are sharing on the screen now, Nigeria Tax Act comprises company income tax, value-added tax, capital gain tax, stamp duty, and so on. They try to merge everything into single law. Instead of you having, this company tax act law, this value-added tax separate, they merge everything together. And they now change some things. Now, government introduced something what we call small business. What is small business? Before, we are using Finance Act. And the Finance Act defines a small business as a company with less than 25 million. That is what the Finance Act said. But now, they not brought this one. They have said the company income tax not divide small business as a business that has less than 100 million in a year. What does that mean? If you are a small business and in a year you have 100 million, you are exempted from taxes, like a company income tax. You are not expected to charge VAT. You are not expected that, people should deduct withholding tax from your invoice. Because as a small business, if withholding tax is deducted, you cannot use it to offset your tax liability. And people should not charge you VAT. That is what small business is defined. And the government now know that, okay, if you call yourself a small business, and in your assets, you have assets more than 250 million assets that you have purchased, you cannot call yourself a small business. That's why they put that clause there in their own definition. Because we have some companies, like some of our companies that we have, they are construction company. And they've not started, but now the asset they have is more than 250 million. It means that even though in the years, if your revenue is not 100 million and your asset is more than 250 million, you are not more a small business. That is what they define. However, you will know from what they are showing on the way, it means that small company, you are going to be taxed at 0%. Why? If you are more than 100 million or 100 million, the 30% still available for you to be paid. That is what the divine, and that's what the new law has brought up. If you now go to the next, before, even though as a small business or maybe you make laws every year, what the government wants to tax before is that they want to tax your revenue. And that's why we have Section 33 there that has already been exposed. Because then, even though you call yourself, you make laws, you are not expected to pay tax. But then, what the government will do is that when you make laws and you have a revenue, they will tell you that you have to pay tax on your revenue, which is over 0.5% then on your gross. But now, just to make sure that, oh, I cannot tell the government that I'm making laws and we are finding a way to generate revenue. That's why that one was expunged out for complaints. And what is developmental levy? Before, you are being taxed on your assessable profit. If you have a profit, your assessable profit will be taxed at 3% to arrive at education tax. And we have a lot of levies also. If you are in a financial institution, you will pay IT levy. There was then also we have what we call Nigeria Police Trust Fund levy, a lot of things. But what the government has done now is that all those things have been mashed together to arrive at developmental levy. Instead of them charging you this one 3%, education tax was 3% before, police levy fee was 0.05%, IT levy is 1% of a lot of levies are mashed together there. Now they have now changed everything. They now put everything at the rate of 4%. It means that the tax the company will be paying at the end of the year, if your revenue is more than 100 million and you have accessible profits, you are going to be taxed at the rate of 34%. They merge everything together. People don't know, when you say IT levy, you know, those levy are made for specific company. Like when you talk about IT levy now, it's only the bank, financial institution that is being paid. But now, everything has been merged together to arrive at home. It means that the company will be paying 34% now if you have accessible profits. That's exactly what they have done in that regards. In tax law, before, we have something that we call deduction allowed when you are doing your tax. Like all the expenses you incur during your financial year, that, oh, you can deduct it from your profit before you arrive at the chargeable tax. Now, when you look at the challenges that we are having with FRS, the FRS will tell you that no, if this thing does not meet their own, we have what we call reasonable, necessarily, exclusively, wholly incur. And the FRS will tell you, even though sometimes when you present some documents to them, that, oh, we incur this thing, FRS will tell you that, oh, in their own, the expenses you incur in carrying out your assessment is not reasonable to us. Definitely, they will disallow you and ask you to go and pay tax on it. But this new Nigeria Tax Administration Act, they've already amended that section that no, FRS cannot be dictating that, oh, this thing is necessary, it's not necessarily for you to incur. The moment you have your third-party document and you show it that these expenses has been incurred in the process of generating revenue for these companies, it is an allowable expense. That's why they remove reasonable out of it, or reasonable out of those things. They now use wholly and exclusively, because this thing we use it. FRS cannot say, at my own discretion, this thing is not reasonable for you to generate your revenue. That one has already been amended. That's why we say that, oh, deduction allowed. A lot of people don't know that this thing has been adjusted. Another one is deductible interest. This one, I want people to take it serious, especially when you are taking loan. Before, when they talk about deductible interest, it's only related to foreign loan, the interest you pay on the foreign loan you acquire. But a lot of people don't know that they've already included local loan also now. People don't know. That's why that tax act, there's a lot of things that has been changed, because some people will look like, and the FRS now, they will take it serious. What does that one say? Before, when you get a foreign loan, you know that you pay interest and they call it finance cost when you check your financial statement.
Sorry? An evening I'm supposed to.
What?
Oh, okay. So what's it called happen now where you just become aged in no time? Is it enjoyment is too much or what?
Please, Mr. Amadou, can you mute, please? Okay, thank you. Now, as I was saying, when you look what they said before, any interest that you pay on your foreign loan, people should take note. Now they have included local loan, which has not been part of it before. Any interest you pay should not be excess of 30% of any before interest in your financial statement. We need to be very careful. If you are doing your accounts or your tax consultant, let them take that section serious. Ignorance is not like skill of the law. You know, some people, oh, finance cost, how much is this? They will not go deep and check. By the time they file your accounts with the FRS will work it out and say, no, you cannot claim this, all the finance cost as an deductible expenses. And you know the portion that will be disallowed, you are going to pay interest and penalty on it. And that's why I said that when you are collecting a local loan, if your accountant, you have a good accountant and your tax consultant, the moment they are reviewing your financial statement before it is signed for submission, let them know how much can I claim out of this interest loan for this year, so that I will be able to carry the other one forward. They are not saying that you cannot use it. They are not saying that you cannot claim, but what they are trying to say that you cannot claim everything that is more than this 30% of your interest before tax, any before your interest in your financial statement. That's exactly what the government is saying. And all these simple things that people don't consider will make the company to pay higher tax, because the moment they disallow it, when we get to penalty, you will see the penalty. It means that we are going to pay penalty on it. A lot of things have changed, but people will not know that, look, even the local loan, it's going to be affected now as against the foreign loan. Another thing the government introduced is exchange laws. What is exchange laws? They know that, look, a lot of people source for dollar. What the government is now saying is this: for us to allow you, when you get a foreign exchange, maybe from the black market, what the law is now saying is this, and maybe the auditor and the accountant also need to take. Government is telling you now, they are not going to consider the rate you use at the black market. They want to use the CBN rate. It means that whether you make any laws or you make anything that you are paying higher something, it doesn't concern government. They want to restrict themselves to the CBN rate. And what they are trying to do is that, since we have been trying to regulate the exchange rate in Nigeria, that, okay, the difference from the bank also sometimes will be lower from what you get from the black market. They are not expecting you to go and get that one. They want to use that any exchange rate that the company gets must be restricted to the CITN rate. We know most of these things before, we have been disallowing it, whether you use, but now, you know, some company will fight the FRS that, oh, I bought this thing as black market, the government, but now they put it in the law. Whether you buy from the black market or not, because the exchange rate has been regulated in Nigeria now, and the difference is not really much. You cannot tell the government that, oh, I get my exchange rate at $2,000, all those things. Those are the things they are trying to put in place. And the client also, or the company also needs to be very careful of most of these things. These are the things that the government wants to do. That's why we restricted ourselves that some of the things that can create issue for the client in future. Those three things that I've just mentioned, they are just being introduced. The others that you can claim that is there before are there. But this one, they just put it there so that you have, especially when, because if you tell the government that what the government wants to do now is this, if you tell them that, oh, we are not going to pay tax, we are not up to 100 million, most of these expenses, the moment they disallow it, they will add it back. They will add it back to your revenue. They will call it, oh, on some certain income, all those things, to make sure that, oh, your revenue will push up, and they will tax it. You are going to pay 34% on it. That's exactly what they are trying to do. It means that we need to be very careful in our account, especially accounting. We need to be looking most of this. And when you have a task consultant, you need to be asking them that, look, this is what we want to do. Help us to calculate it. Are we at the threshold that we are not going to pay additional taxes? Everybody doesn't want to pay unnecessary taxes to the government. That's what we call deductible expenses before you can pay tax. And when you say something is deductible, they are telling you that, oh, before we are not going to tax all your revenue, these expenses also you can add it and reduce the tax you are going to pay to the government. But when the government see that you are trying to play pranks, they will disallow it and they will tax it accordingly. Another one that was introduced this year, donation. Before, you know, before there is a rules. Before you can donate, they mention something that you can donate. Oh, if this one, you cannot donate to this place, you cannot donate to this person, you cannot do this. But what the government has done now is this. They said, okay, even though you want to donate, they are not saying you should not donate, but it should not be more than 10% of your profit. So it should not be more than 10% of the profit the company had in a year. You can donate now, but before you cannot, because they mention some things you can do. However, we need to be very careful. If you make loss, maybe you make loss in a year and you are now donating, the government will disallow it. They will not accept it. No, you make loss and you are donating. What do you mean? That's why they now look at, okay, if you make profits in a year, this is worth at least 10%. They look at, okay, it should not be more than 10%. But a lot of people will go ahead and donate, and they will tell you, oh, we donate to this charity organization. What the government will tell you is that, but you make loss. How do you expect all? It means that you are not taking care of your business and you are going to donate. If you don't follow this procedure, it's going to be disallowed for tax purposes. That one also, they just introduce it. It has not been in the law before. These are the things that is very urgent that the company need to take serious when they are doing their financial year. And fine, we don't know yet, because we don't think that in 2026, maybe this thing will apply to 2025 accounts. We don't know yet, but I don't think it should be applied. I don't think. Maybe that we say from 2026 financial year end. But this year, I doubt they will give people, because a lot of people might have done something and you cannot say, oh, I'm just getting the law. I believe they will. That's why they said this thing we started in January. And when it started in January, you must follow all the rules they have laid down. That is for the company income tax. And these things that we have mentioned, those are the changes that will affect the company income tax. Those are the changes that we see that is going to affect the company income tax when you are preparing your tax computation. The next one is, okay, they said, oh, they exempt some company from company income tax. They exempt some funds, but the new one that they just introduced is that if you are into agricultural businesses, the other ones are there, but they just introduced this one as a new thing. That, oh, if you want to carry out agricultural businesses in Nigeria, for the first 5 years, you will be exempted from tax. This one doesn't affect whether you are a small business. Even though you start your business, maybe you are making billions, agriculture, cocoa exempt, all those manufacturing. I think this one is just to encourage people to diversify into agriculture. That, okay, in the next 5 years, so I started my livestock, maybe chicken, rearing, breed, all those things. Government say for the next 5 years, all these things that we have mentioned will not concern you. If you like make profit 1 billion, you are going to be exempted from tax. That is the only one that was introduced. It is not forever. It's only within 5 years. After 5 years, you are expected to come and be paying your tax. Your company, your profit before tax will be subjected to company income tax. That's what the company income tax about. And these things that we have mentioned are the major things that is new in the new Nigeria Tax Act for the companies in Nigeria. I will now go for VAT. The VAT is, I know a lot of people are waiting for VAT, and I want people to listen very well, because I always tell people, government does not play with VAT. Government can come tomorrow and tell you that, oh, company income tax, we withholding all the VAT. The government doesn't play with VAT. They don't play. They've divided the VAT now, taxable person. Before the advent of the Nigeria Tax Act that will start in January 2026, in Finance Act, the definition of taxable person is, oh, if your revenue is more than 25 billion, that is the definition before. It means that if my revenue is 25, more than 25 million, I'm a taxable person. If your revenue is not up to 25 million, you are not a taxable person. But now, because the small business has been increased to 100 million, they did not mention that, oh, as a taxable person, if your revenue is more than 100 million, that one has been cancelled. And now, if you look at before the Finance Act, if your revenue is not to 25 billion, you can decide, I'm not filing VAT, I'm not doing this, I'm not doing that. But now they have put a lot of restrictive method in the new tax law. Fine, the government, oh, the tax law, those things, but a lot of things has been put in place. Now, they said a taxable person shall in respect every month. Now, before, if I'm not a taxable person, even though if I don't make any revenue in that month, or I have not started, you are exempted from filing VAT. But the section 22 of these are the ones that was introduced, and they put it here. Whether you have economic transaction or not, you must file VAT. It means that even if I register my business, and you are not taking care of, oh, I've registered business, oh, I don't, since I've not started all those things, the government will use this law to catch you. Go and look at it. They told you whether there is economic activities are taking place or not, you must file VAT returns. The government is looking the way to generate money. This one that was introduced was there before the Finance Act. Before the Finance Act, if you register a business, they don't want to care. Every month, then we are still using paper. You have to fill VAT from 8, from VAT from 002. We take it to the revenue. Every month, they will stamp it. And this is exactly what they are trying to say, that even though if you are not in economic activities, you must file your returns every month. Before I can tell the government, because in the last law, Finance Act, it was stated there, if you are a small business, you are exempted. Don't file, nobody will penalize you. But the government won't know what they are doing now because they need money. That's why they said if you make any mistake and you don't file your returns, automatically the tax promise will calculate penalty for you. We have a lot of clients that VAT returns, even though you don't file. If you file late, it will not calculate penalty for them based on the Finance Act. But this new act that has been amended, please don't make mistake to say, oh, I forget, because the penalty now is very heavy. That is what the section 22 of section 1 is talking about, that people need to be very careful of. The section 22 subsection 5, I will come back to it. What really happened is this. Let's go to the next. I will come back to 22 and I will tell you the reason why that section 22 is going to be very careful and people should take it serious. Please, you can go up, just go up. I will still come back to this one. Now, government introduced what we call digitalization of tax process. What did they mean? From next year, every invoices will be processed through what we call e-invoices. And that's what this section is talking about, which the government introduced e-invoices. It means that from next year now, if I want to have a deal with a client now, you know, before I would just say, oh, we have finished your job, this is our invoice, pay us. The government is saying that all your invoice must pass through e-invoicing. They are going to design it from next year. They've already approved some company that will process this e-invoicing. For now, it's only the company that has a revenue more than 5 billion. More than 5 billion, they are allowed to start from November. But a small company, if your revenue is not up to 5 billion, they will start from January. What does this mean? It means that if I want to have a client and I want to issue an invoice, my invoice must pass through FRS portal, and FRS will have this stamp on it. If FRS have been stamped on the invoice that I sent to you, because I have your TIN number, I have everything you have. That invoice, the moment FRS approve it, if it go to you, you will see it. And you have the right to look at the invoice. It's either you accept or you reject. The moment you accept, it will come back to me that, oh, your invoice has been accepted. If you reject it, it means that your invoice will come back to me also. That yes, I have seen your invoice. Now, the issue what we have now is this. We have contacted, I think the FRS approved maybe 15 companies, or maybe 10 or 15 companies. We have had a meeting with almost 7 of them. And That's why I said that where the issue will come is that they are saying, fine, the cost will not be borne by the FRS. Anything that those companies wants to do, the cost will be borne by the taxpayer. From our discussion with them, for now, they don't know the cost for small business. But for the big business, when your revenue is more than 5 billion, from our discussion with them, they are telling them that for them to be integrated to the FRS portal to be done, they are going to take between 20 million and 35 million. But for the small business, they said they don't know yet. And what we noticed, because we have one client that their revenue is more than that, they now said you are going to be paying annual fee. They are talking about the business, big business. They are going to be paying annual fee of 2.5 million. I just laughed. Well, let's wait and see what they are going to talk about small business, because a lot of things we are introduced, and that's what they call digitalization and the physicalization. But a lot of people don't know those things in the law. And where the issue will come now is this. It means that if I'm not onboarded on that e-invoicing, no client will want to do a business with you, because the FRS will come tomorrow like, okay, this invoice, we cannot trace it from the tax promos. We are not onboarded, and we are submitting accounts. How will you now take this money that, oh, this money you have incurred it, oh, this person paid you all those things? And also, when you look at this physicalization, there's also a penalty if you are not onboarded and you call yourself a company in Nigeria. There's also a penalty accrued to it. Like what I said, we have to wait for the commencement of the small business in 2026. And I believe before December, I believe that the government, those people will get back to us if the government has given them the go-ahead. Because now, as a small business, even though if they want to onboard you, you cannot be onboarded, because that link will not go. It will tell you that, no, not yet available. That's why those people also, they don't know what to do. In essence, what they are trying to say is that any taxable person, if you are making a taxable supply, it must be done through electronic invoicing. That is exactly what they are talking about. And this thing has a lot of steps that it will take. We have what we call system integrator, and we have access provider. I would have gone to details, but it's very, because the system integrator is like, okay, let me briefly explain what they mean by system integrator and the access provider. For example, now, if you have any software you are using, maybe ERP that you are using in your company, those people will look at you that, okay, what do you want us to do? Oh, we just want you that, okay, we want to use your platform to process our invoice. And now you, when we upload our invoice to your system integrator, you will send it to the FRS. FRS will stamp it. You will be like a middleman to us. But access, what they are telling you is that they will connect your system directly to FRS portal. And if they connect your system directly to FRS portal, it means that you will be the one doing everything by yourself. They don't need to, and those one, their money is very high. Their money is very high. And also, we ask them that, okay, for example, we have some things that, okay, if I purchase maybe some artisans, small people, all those things, they now said, okay, in that regard, it means they are giving a taxpayer more work. They are going to provide, you will put everything in an Excel, you will send it to them, they are going to upload it to you, because a lot of things are there. That's why I said that invoice, a lot of things, maybe it's another day for the discussion on that. But because it's going to come up next year, that's why I brought it down. We will see, they've already put it in the tax law that it is mandatory that every invoices must be done electronically. Every invoices. If you don't do it, the government will not recognize when you are filing your account, when you are defending, and we are going to be penalized also on that. Every invoices must be done electronically. It means that if you don't do it, you cannot pay. Even though I won't be able to pay you because I will look at, I don't want to fall in the hands of the law. That, okay, I pay you now, and the government will come tomorrow that the money you pay, they are not going to recognize it. It's going to be, no. Nobody wants to take chances. Like what I said, let's wait and see for the small business and see what is going to happen. But based on what we discussed with every one of them, even though eTransact, we contacted them before, eTransact was also part of those people appointed by the FRS. They mentioned it, 5 billion, we are collecting 35 million. And we are going to be paying us 2.5 billion every year as license or annual fee something. But for small business, every one of them said that let's wait because they've not contacted them for that one. And that's when they call a lot of complaint will come and say, what are we going to do this thing? But let's wait and see what they are going to talk about it before the end of the year. Now, let's go to, I'm still coming back to the VAT that I mentioned there, but we'll soon get there. Now, let's go to credit for input VAT. And I think this one, I want people also to listen to this one. Before, you cannot claim input VAT on services or something like assets, everything. They will tell you that you cannot claim input VAT on it. It means that what they have introduced now is this. As a tax consultant, if I invoice you and I charge you VAT, it means that VAT, you can use it to net off your household VAT. That's exactly what they've introduced. That was not there before. It was not there before. You can't claim input VAT on services and the assets. But now it has been introduced that services, anybody that charges you VAT, you can claim it. And also what they have introduced now is that if you are paying, if your input VAT outweigh your output VAT, it means for now, you can claim for refund. You can claim for refund, and it's going to be refunded within 30 days. Probably, we don't know, but I believe because the chairman of the presidential task force, which is Taiwo Yedele, he said it, that everything has been put in place. And I know that for you to have said that, and they too, they are not disbanded, they are still working with the federal government, and they have a stake on this. I believe that if I have such thing, I can claim it, give me my money back. But most of the time, some company will say, since I'm still having a lot of VAT to be paid, I can use it for the next output VAT that needs to be claimed. Everything has been stated in the law. However, where I believe that you can claim the input VAT, if you have excess VAT, is if the government comes, let's assume that the government comes now and you are being tax audited for that year. Let's assume that you are being tax audited for the past maybe 6 years, which they have the capacity to do, or 3 years. And after the tax audit, you have a lot of input VAT you have known that, that you have not claimed. I would suggest that you write and get that money back. It's in the law. That, this year has been tax audited, and I have enough of input VAT that yet to be claimed. I have with credit notes that I know that it costs to billion. You can write to the government and tell them that, look, I want to claim my money back. That one has been in the law before, but they don't take it serious. But for now, based on the new Nigeria Tax Act that was amended, I will advise that, look, we can go back and do this one. That is my own thing on it. That is the bad position that I'm trying to say. Can we go to the, okay, can we go to the next one? Okay.
Yes,
Let me
sir. We
quickly-
can. Yes, sir. Can you hear me, sir?
Yes, I can hear you. Let me quickly round up.
Okay, yes, sir. Okay,
Let me
thank you,
quickly
sir.
round up on this thing
All
so
right.
that we can, because let's go to personal income tax. I believe that we are going to share they are going to share this thing with you people so that you can look at it. The personal income tax, what actually happened on personal income tax? They introduced what we call rent relief. It means that if your employee has a rent agreement that that person paid to the landlord, it's the duty of the HR to collect it, and you can claim it as also a rent relief to reduce the tax you are going to be paying to the government. And also, the tax band of the the tax rate on the chargeable income has been reduced significantly. It means that if your salary is high now, you are going to pay a lot of taxes. If your salary is high, you are going to pay a lot of taxes. Those are the only two things that was introduced to the tax. There are so many things there, but due to the time giving all those things, you can look at it and you can ask any question to what we have already explained before, because I was told that the time giving is already gone. I'm waiting for any question based on what I've explained. Thank you very much.
All right. All right. Thank you very much, sir. Thank you very much for the presentation. There was so much to say, and there's really a lot to say, but for time, because the people who work with, a lot of them are business people, and most of them are even in their business places as well. So please, I know we have questions. We have questions that are bothering us that you want clarity on. What I will select. I will select some questions. There are some questions that have been asked in the chat session. If you can ask your question in the chat session, I'm also going to there are some questions that people asked already from when they registered for this webinar, and I'm going to select a few of them, and I will ask first while we wait for other persons that will be asking questions live from the chat. So one of the questions here, sir, is are retail pharmacies required to pay tax to the federal government? If yes, then under what conditions? That's one of the questions the person asked. That question is to you, sir.
Okay, yes, they are required to pay their company income tax and VAT to the federal government, and they will pay anything that relates to business name, like payee, withholding that was deducted from the business name or individual to state. Those are the only two taxes. But when you are dealing with the federal complaints, all the taxes go to the federal government.
Okay, I believe the person that asked that question is on the call and was understood the response as well. Okay, one other question here is that what are the specific focus on individual and small businesses regarding the new tax law?
The individual and small business, they are exempted from taxes for now. Just make sure that your revenue is not up to 100 million, and that's the only thing. And they don't have any things to do with the government, even though they are exempted from developmental levy, which is 4% I mentioned earlier. The small business doesn't have any issue, but where the government comes, that I mentioned before, like if your revenue is like 99 million and they now notice that there are something that was disallowed, they will add it back. And if it's more than 100 million, they will tell you to go and to pay taxes. You have to be very careful based on most of the expenses that you disallow for tax purposes.
All right, sir. So the other questions in the chat box, I'm going to give like 3 persons to unmute. If you raise your hand, I'm going to call on you, then you speak, and then I will 3 persons. I'm going to select 3 persons to ask their questions. But before that, there's a question that someone asked as well that is very, very key. I feel needs an answer. It said, what is the process? There are new laws are coming in. I know pharmacists get to file for tax at the beginning of every year. So the person is asking, what's the process of filing my tax? Say I've been operating my pharmacy for 3 years now. What are the steps I need to take? This question is quite, I know it's going to require a detailed response, but if anyway you can summarize this for us, it would be great. Thank you.
The only thing the person needs to do is that if you have not been filing for the past 3 years, or maybe you have not been doing the right thing, the best thing you contact the FRS and they register properly and they start paying your taxes. However, for the backlog taxes, if you want to remit it, the penalty and interest we accrue on it based on the tax promise that we designed. That is the only thing.
Okay, so we have I actually want to call on you, Isa, to unmute, right? I believe your hands have been raised. Isa Habibu, can you hear me? Your video is on. If you can unmute, I believe you have a question. Just ask. You have like 2 minutes to ask your question, please. At most 2 minutes. So we'll go to the next person. Okay. Can you unmute?
Do you hear me?
Yeah, I can hear you now.
Okay, my question is, which way that is simple to pay my tax with the short time? Which way I want be?
Sorry, I couldn't get the question. Can you repeat it?
My question is, the tax, which way that I want to be to pay my tax at the right time?
Yeah, the law says every tax, the VAT is payable on or before 21st of the next month. If you have a transaction this month now, before 21st of next month, you must pay your VAT. If you are dealing with a vatable product, you must pay it. Even though if you are exempted from VAT, you must pay, you must file it and show it. But everything must be done on or before 21st of every month.
Okay. Thank you.
All right. Thank you for your question.
Thank you, sir.
Yes. So, all right. So I've said that 3 persons. Again, next person I want to call on Sada Richard, as I see it on my screen. I know you have a question. Please unmute and ask your question.
Good afternoon.
Good afternoon.
Good
Good
afternoon.
afternoon, Farmer Joe. Good afternoon, Mr. Akeem. Thank you very much for the enlightenment. I have 2 questions. The first one is regarding small businesses. So we do believe that pharmacies are small businesses that do below, okay, before 90 to be below 25 million. So, but I'm so surprised that you said 100 million naira to pay. The information we've been having is less than 15 million naira. I'm surprised that you are saying 100 million naira because I need that cemented. That's all. That's then the second one. You have been talking about VAT. So I have a tax pro max account and I have been doing new filings. They call it new returns. Is that what you mean by fact? I really want you to expatiate on it. So the
So,
first question was
sorry, I couldn't get the second
less than.
question. The line is
Okay,
really.
the second question is, so I've been doing tax pro max filing every month. It's usually done between the first day of the month to the first day of the month. I've been doing that from month to month. But I want to know, you don't pay for that. It's usually new filing. So I want to know if that is what you mean by fact. That's my second question. Thank you very much.
Thank you. The first question is like, if I get you right that, I presented 100 million, but what is being circulated is not up to 100 million. You are correct. You are correct. If you look at the tax law, that's where they made the mistake. And they defined it like, 50 million and 100 million. And we've already sent a request and everything. And we are made to understand that, that 50 million that they mentioned, it was a mistake. That is 100 million. Even though if you ask, if you watch most of the time when they bring Taiwo Yedele or any of the president spokesperson or the presidential task that was inaugurated by the president, they always say it's 100 million. And when you look at what I presented also, we put it there. There's a section of the law that said small business, it is 100 million, and that 50 million, according to them, I believe that they said it was a mistake. The definition was a small company in the Nigeria Tax Act. They said it's 100 million. That is this.
Yes, sir. Does that answer your question?
Yeah, I have a question.
All right.
Yeah,
All right.
he answered
the
the
second-
first one, but the second question has not been answered.
Which one? I couldn't hear you. That line is, you said?
Can you ask the second question again?
Yeah, I have a question.
Yeah. It's the same
Okay.
thing as filing. You said you have been filing nil return. Yeah, sorry, it's the same thing that I'm talking about. Correct. Yes.
All right. Alegulem Gona, please, your hands have been up. Just unmute and ask a question briefly and get a response while we round up this session and go to the next session. Thank you.
Okay, sir.
If you are there and you can't hear me, okay, now I'll just go to the next person. I think I can see other hands up. Let me see.
Hello?
Okay. You can go ahead and speak.
Yeah,
I thought you didn't hear me.
I want to ask the guest. I want to thank him for what he has been doing. Concerning the PPMV, that is small business. I quite have some people ask the same question, but I want to know the advantage of CAC. Does it have anything to do with this tax to our business? Because of the thing, they are always attached to CAC. And the small business, as they say that we are not into pay tax, but we do see some people, some government organization, tax revenue coming to our offices to demand for tax. As of earlier 6 months ago, they paraded every business owners saying that both small or big, that you are meant to pay tax, and they were collecting physical money. So I want to ask, what shall we respond to them when they come? Because they told us that they are coming again, those that they didn't collect, though they didn't collect from it. So I want to know our response to that. Because as I say, no tax for the small business, because our business are smaller, even compared to the pharmacies. Thank you.
Yeah, thank you very much for that question. We have two things that we need to know when you're talking. We have what we call tax and we have what we call levies. Now, the only person, those people that came, they will not tell you that they came for VAT or withholding or pay all those things. Those people that you are talking about, I believe they are maybe local government. And the law that if it is in Lagos, for example, now, if it is in Lagos, if local government comes to meet me that they want to collect, I will ask them, I'm a business. I don't know about what other states. It has happened to some of our clients. My own is to show, look, I'm a small business. I pay PAYE. I pay business premises to Lagos State. What you are asking me for, why should I pay? I'm a registered company. And I believe when you look every state, it's Lagos State that is well regulated. But other states, you just see people will come, all those things. And that's why I tell you, what they are coming to collect from you is levies. It's different from tax. And
when you say shop permits by the
that's
council,
what I'm saying. That's what I'm saying. If you are in Lagos now and the government come, local government come, and they say shop permit, I will tell them no. I've paid business premises to Lagos State. They will not disturb you. If you have done that, if you are in Lagos and you have the evidence that you have paid business registration, which is 5,000, no local government will come and disturb you. But other states, they will still want to get money from you. And I believe that one should, maybe is it Lagos State we are talking about, sir?
Yes, Alimosha.
And did you pay business premise to Lagos State?
Yes, that is the shop permit.
No. That's what I'm saying. If you are paying PAYE, I believe they would have understood what I'm saying. Every year, by the end of the year, you pay developmental levy to the government, and we'll cover what we call business premises permit, which is 5,000. Because you have not paid that one, that's why those people that are coming, they are local government, and that's why they will say you have to pay it. You understand? And they have the right to collect that one shop permit. But if you tell them that I rented this shop and it's a business, I paid, see the evidence that registered with the Lagos State, this is my evidence that I pay business premise, they will not collect it from you. But they see you as a shop owner. That is the reason why they are collecting that levies from you. Thank you.
Okay. All right. Thank you.
All right, thank you, sir. I saw a question here and I needed to read it out because nobody should be trying to attempt this. It said, what are the consequences if someone decides to operate without obeying the new tax law? Well, when you break the law, you know what the government will do to you. I'm not sure I need the consultant yet to give us answer to that. So don't evade tax, please. Comply with the
Sorry,
law.
let me say something to that. In one of the tax law is this, and if you say you want to disobey, and part of the law is that a lot of people will not be able to do business with you because from next year down, if I want to deal with you, you must prove to me that you register with government agencies like FRS. If not, I won't be able to deal with you because if I'm dealing with you, I'm going to pay 5 million to the government, and no company want to take that chances. Nobody want to deal with you. That is my answer to that.
Wow. I didn't even know that the implication was that much. So please don't share that person you're on the call, and if anyone is having that thought, please desist from it because you will harm yourself more than do good to yourself. Right? I still have hands up. I think I'll just take the last one. I don't know how many hands I have up here. Give me a moment. Let me check through. Okay, let me just have Greg Sonu ask this question, then we head to the next session. Thank you.
All right. Thank you very much to Chef Life and to our task consultant. Can you hear me? Please confirm.
Yes.
Okay. So the question I had to ask, I think one or two persons have touched it, but let me just ask the aspects that I think they did not ask. So for for pharmacies, community retail pharmacies, in Delta State, as a case study, we pay some monies to the state government, the state revenue service. Now, the question I want to ask is, from next year, based on this new tax law, are we still expected to pay such revenues to state government and also pay tax through what's called FR, that's NRS, from next year?
Yeah, thank you very much. We have three types of the government agencies. We have federal, we have state, and we have local governments. Now, this Nigerian Tax Act only deals with federal and the employee, which the FRS has the mandate to regulate. Now, for the states, and that's why I said a state has a lot of taxes they collect from small business. The state, the federal government doesn't have the power to regulate this. Some of those taxes that you pay to states, I am of the opinion that it is going to be still go ahead to pay the money. But the one that is related to federal, the state will never come and ask you to pay it. And the Nigerian Tax Act is related to the companies and the individual. But when you come to the levy that the state collects, they have the power to collect it. They are trying to harmonize it with the state now, but it's yet to be passed to the law that most of these levy they are collecting, they want to stop it, but that one is yet to be passed to the law.
Sorry, if I can quickly, the new tax, based on what you explained to us on this new tax law, one of the goal of the federal government is to protect small businesses, which pharmacies happen to be, for the classical example of a small business. Now, while the federal government is exempting us from paying tax, and the state and local governments, they are also mandating us to pay tax, don't you think that the essence of the whole protection from federal government is defeated? Because I can attest to you that the tax that even the state government will demand sometimes may even be bigger than what the business could have paid to the federal government, as the case may be.
Yeah, I agree with you. When you look at the tax that the federal government collects, let's start from the VAT. If you look at the VAT, for example, now, VAT is not being paid by the company. VAT is being paid by the consumer. But when you look at that 100 million, look at it. Let's assume government did not exempt that 100 million, and you are asking you to pay 34%. Let's assume that, okay, after your expenses, just an example, you now make 50 million after your expenses, and the government has said, come and pay 34%. You know how much it is. That's why the government cannot legislate for the states. And like what I said, they are discussing with the state to see that all these taxes they are bringing, levies, all those things, they want to harmonize it. That one is still, they've not passed it into the law, even though they are still reviewing it. Let's wait and see if the state, the state will tell you, no, I have my National Assembly, go and do your whole. But this small thing, I still want to collect it. But let's wait and see what is coming out of it.
All right. Thank you very much, sir, for the answers, the questions, and the time for the presentation. I believe as many persons that are here have gained a bit more clarity as to what the tax law and new tax law entails. And of course, this conversation is going to continue to give more responses. So please stay put on our social media channels so that you can also get to have a clue as to what the conversation is going on with. Yeah, so thank you, sir, so much. We really appreciate your time for coming to be on this webinar with us today.
Sorry, can I say something before I go? I'm seeing somebody asking a question we don't need to be partial. Let's attend to the people that send questions also via the
chat box.
message, so that it will not be, because some of them send a message. I believe we can answer them and just because of us.
Okay, so the question I can just see on my screen now is that what's the percentage we have to pay? That's one of the questions the person have asked here. So can you just respond to that while we close the session, sir?
Okay, the percentage is, if what you are doing for VAT is 7.5%, and for the PE tax, it varies. It started from 0% to 15% to 18% to 21%. The higher your salary, the higher you pay tax. That is the one for that one. I don't think that. And somebody is asking a question. I said, look, is pharmaceutical product liable to VAT? The new law has already exempt the medical services and the pharmaceutical product. They are not going to pay tax based on the new law. And another thing, sorry to shift you, another thing is that it will look like, okay, if my product is not, I'm not paying VAT on the gross, and I've already incurred expenses where I've paid VAT, you get what I'm saying? Because of the time is not there. There's a law that said that, okay, if anything that you have purchased, that you are not, your output is not vatable, and you incur VAT on your inputs, the law said that if that thing is related to the production of that drugs or pharmacies or anything, you can get your money back from the government. As what they have said, let's wait and see. But I think I've answered so many questions based on the one that came in through the messages. Thank you very much.
All right, thank you so much, sir. Thank you so much, sir. So basically, if you know this is a free webinar, of course, but if you want to get consultation, you need to book for such consultation to get more clarity. And if you want your as to the whole new tax laws that are on. So if at all you will need such consultation for AA tax, you can reach out to us. We can give you the contact of AA tax. This is the managing director, Akeem Adekunjo, who has just had a webinar with us. Thank you very much, sir. We really appreciate the time. I know you're responding, but you're okay. All right. Yes, left the call. So we're just delving into the next session, which will take us about 30 minutes, and we are out of here. And we have our in-house finance specialist, Moses Alagbasu and Naftali Hassan, to just take us through what we call the simple record keeping and reporting practices. And then after that, we'll have a bit of Q&A questions, Q&A time, then we'll be out of here. So we map ourselves in the next 30 minutes, we'll be out of this webinar. So I'll just share my screen while Moses come up for his presentation. Thank you. Moses, over to you. You can unmute, please.
All right, thank you very much, Edward. Good afternoon, everyone. So I'll be discussing on simple record keeping and reporting practices for PPMVs and pharmacies. Please, can you show the first slide, Edward? So as we all know, right, in regards to taxation, right, one of the key areas at which the tax authority are looking at are your records for your business operations. So which is why it is very important for your pharmacies or you as a business owner to always ensure that all your records are intact. Because if the government comes tomorrow and say, okay, let me see your record to know if you're earning above the minimum threshold for CIT. So like it's your record that speaks, not just you telling the government that, oh, I do not earn 100 million annum, I do not earn 200 million per annum. it's this your record that speaks on your behalf, not just word of mouth. It's your record that shows that, oh, you do not earn this amount of money annually, right? So I'll simply define, or okay, to put it simply, record keeping is maintaining accurate records and documenting events or transactions. A business record is a written evidence summarizing a transaction carried out by a person in his or her business at a given time or over a given period. Business records are normally kept in books in an organized form. This record can be maintained in either electronic format or in physical format. So in essence, right, you can always store this record in a physical format. Maybe let's say you have a receipt that you got from a particular supplier or a vendor. You can keep or file that receipt physically, or you can scan that particular record and document in your drive or your cloud database. Okay, moving on. It is imperative for you to keep accurate records of all financial transactions, including source papers and vouchers, receipts, accounting records, bank statements, and any other related transaction. One of the most crucial and time-consuming duties of managing a company is maintaining financial records and receipts. Like I mentioned, it is very key that you keep your record. It is very important that you keep your record as a business owner. This are what on your behalf when you are relating with the tax authority, or whenever you're relating with any person that comes to your business, your record speaks on your behalf. Moving on to the next slide, we have purpose of keeping business record, right? So apart from tax purposes, or let's say, the tax authority might come today. So apart from that tax purpose of keeping record, there are other purpose of keeping records as a business owner. Apart from, say, you want to remit VAT or you want to remit CIT, there are different purposes of keeping record. So number one is it helps you plan and corresponding income and expenditure, right? So when you keep your record, it helps you to know, okay, how much am I earning in this month? How much sales am I getting in this week? How much revenue am I getting in this part, let's say in this year? It also helps you to track your expenditures as well. Say, okay, what have I spent today? What have I spent in the last 1 week, or what you've spent in the last 1 month? So keeping business records helps you as a business owner to help you track your income and helps you to track your expenditure at the same time. Number two reasons why you need to keep your record is to ensure that your business is making profit at any given time on the basis of fact and record, right? So when you keep your records of your income and when you keep your records of your expenditure, right? As we all know, income minus expenditure will give you your gross profit, right? So when you keep those records, you would know at that particular point, oh, is my business making profit or am I making loss? So keeping your business record helps you to know if you're making profit or if you're making loss, or if you're spending too much than what you're getting from your business, or if you're making more money than what you're spending. Keeping business records helps you to determine these two sides of them. Then the third reason is it helps you to consistently follow up on your obligations with your business partners, such as your suppliers and your customers. Moving on to the next slide, Adele. The fourth reason is it helps you to mobilize additional capital from banking or cooperative institutions. Say, for instance, now your business needs a bank loan, right? So the first thing the bank will ask you is how much revenue do you generate in a month, or how much revenue do you generate in a particular year. So keeping your record helps you to provide those vital information that you need to get loan from bank or any cooperative institution that you belong to. Also, maintaining records helps you to maintain your meaningful account statements for the business and to carry out audits. And it also helps you to separate your private transaction from your business transaction, right? As a business owner, one of the rules of accounting is what we have entity concept, which states that your business is different from you as an individual, right? So keeping your business record helps you to distinguish between your entity as a business and you as an individual. That's what keeping your record helps you to do. Moving on to the next slide. Then the reason why we are here, right? This is the reason why we're here. So keeping your record helps you to manage your tax affairs better by providing basis for computing and correctly computing your tax liabilities by yourself, right? So like, let's say, for example, now you know how much you generated in a particular year, you know how much you spent in that particular year, right? And you know that, oh, this particular range, you're not supposed to remit CIT to the government because you did not meet the threshold for other businesses, right? So it helps you to, completely correct your tax liabilities by yourself. Also, filing your tax returns accurately and on time. So keeping your record also helps you to file your tax returns accurately and on time, and it also helps you to pay a fair tax, and also helps you to claim lawful entitlement under the tax law, such as allowances, capital allowances on assets in use in your business, as well as tax credits and tax reforms where applicable. It also helps you to avoid tax assessments raised by the tax authority using other methods that may not necessarily be favorable to you as a taxpayer, right? So under the new tax law, right, you can determine your tax by yourself and go to the tax authority by yourself and say, this is my tax for the year, and I have come to remit my tax for the year, right? In most cases, you do not have to wait for the tax guys to come to your business and say, oh, you're owing us 1 million naira, you're owing us 2 million naira, right? So it helps you to avoid, where the tax guys will come to your office and say, oh, you're owing us 1 million naira, because at the essence of every other thing, the tax authority tax will be higher than what you are sat down to compete by. This is the tax that my business is going to pay for the year, right? Also, it also helps you to avoid tax dispute and to avoid penalties from the tax laws. Moving to the next slide, so we have kinds of business records, right? So you should keep your business record, which provide enough details for all transactions at any given moment in a specified currency. This record should be based on documents containing primary information for every transaction carried out in the business. This document should be properly and safely kept. In other words, your records include the following, right? So they have different records that you should keep as a business owner. Number one is your fixed assets. So fixed assets are those permanent or long-term assets that you acquire for your business. For example, you acquired an AC for your business. That AC is a fixed asset. You acquired furniture and fittings. Those are fixed assets, and you should have receipts backing those purchases in your books, in your record rather. And you should have a list of those things that you bought, which are fixed assets on one hand. So moving on, there are also expenditures. So these are money spent on day-to-day running of the business, such as maintenance costs, travels, utilities like power, your water bill, your telephone bill. So this forms your business expenditures. And for any expense that you make as a business owner, or as a business rather, you should have support documentations backing those expenses. Because when the tax guy comes to your office and say, oh, you said you made an expense worth 1 million naira last year, please show me a receipt that backs your claim. They expect you as a business to tender those receipts or those vouchers that support that this is the amount of expenditure that you made in a particular year or the year under review. So you're supposed to keep your expenses documentation as well. Moving on to the next slide. So part of records that you should keep as a business are your tax affairs, everything that involves tax affairs. If you're a business that's already paying tax, right, so you should be able to keep those tax receipts, because whenever the government comes to your office and they say, okay, show me a tax payment you made this year or that year, you should be able to tender those receipts that you have been able to remit to the tax authority. Also, part of your record you should also keep are your bank transactions, which is very important, right? You should also endeavor to keep your bank transactions and any other personal drawings that you make from your business, such as a business owner, like I mentioned earlier, your business is separate from you as an individual, right? So if you as an individual make some withdrawals from your business, let's say today you went to your business and said you want to withdraw 10,000 naira, for example, right? You should have those records of how much you have withdrawn from the beginning period to the ending period. You should have them on a record that shows that this is how much you have been able to withdraw from your business. I believe that most of our business are like already doing that already, but these are things that are very important in ensuring that you have your records intact. Then moving on, the other thing is your sales, right? These are goods or services sold for profit in the ordinary course of business. Sales records are kept in a sales book. You should have a book that tracks all your sales so that you'll be able to determine how much revenue you're making in that period. You should have a sales record and also have a purchase record that tracks all the purchases that you have made. You know, when you go to a supplier, or let's say when you come to us and we issue an invoice that says you purchased goods worth 1.2 million naira, that serves as a record that you should keep as a, because it's a purchase from us, right? And it's an invoice that shows that you purchased these items from field or from shelf life. So those receipts or those invoices shows that you did purchase this product from shelf life. Moving on to the next slide. So we have the document of primary information. Document of primary information. These are documents issued by you to your customers or to you by your suppliers of goods or services as the first evidence of every decision taken. They include invoices for goods and services sold or bought. Like I mentioned earlier, when you come to shelf life and we issue you an invoice, that serves as a document of primary information. Moving on to the next, we have cash receipt for goods and services sold or bought, receipt for taxes and other government dues paid, vouchers prepared for various business expenses, receipt for payments made in respect of assets and utilities, such as power, water, and telephone, etc. Then we also have agreements relating to business contracts and checkbooks and bank statements. Then other business correspondence and documents, such as your letter to the banks, letter to different organizations. So all these forms your document of primary information, which you should have in your business record. This document should be kept at least 6 years, as they are only necessary for reference when the need arises and for tax purposes. Moving on to the next slide, we have a simple business record. For every transaction, we involve exchange of goods and services for money. Basic business record, especially for PPMVs and pharmacies, will normally require consistent record of all cash and credit transactions. Now, what do we call cash transactions? These are all activities of business where cash is received or paid out. A cash book is usually used to record cash transactions in order to ascertain the correct cash balance at any given time. Now, let me further explain this cash book. Now, you can have a book that shows how money leaves your account or how money leaves your business, how cash leaves your business. So for any money that goes out, you record them down on one column. And for any money you receive from your client or from anybody, you record them on the other hand. So this is the cash book that you maintain as a business that tracks how cash is leaving your business and how cash is coming to your business. Then we also have credit transactions. These are all activities of a business where cash is not immediately received or paid out on the date of a transaction. I believe that most of our businesses have this in place already, where they have a book that shows customers that come to our business to buy goods on credit, right? So we have these records that, this person came to this business and said, okay, he wants to buy a product worth 1 million naira and he doesn't have money at that particular time. You can have a book that tracks all those kind of transactions for those particular kind of customer. Moving on to the next slide. So as a PPMVs or as a pharmacy, right? How should you track your transaction? In a very simplified way, without having to go out to start asking for help. You can do this by yourself by tracking your business. So we have a simplified cash record book. So this shows the date, the particulars of receipt or payment, the amount you have received, and the amount you have paid out, and the balance. So it helps you to track all your cash transactions which involves receipt of cash that will increase the cash balance, or payment of cash that will reduce the cash balance. So in this slide, you have the cash book that shows how money is leaving and how money is coming into the business. When money is leaving your account, you put it as cash paid. Then when you make a sales to a particular client, you have it as cash received. Then the net of what you have paid out and what you have received is then forms the closing balance for the cash book. Moving on to the next slide. Then we now have a sales day book, which track all the sales, right? This is like the simplest way you can track all your revenue in your business. You have a sales day book that tracks all the revenue. Just put the date, like when you come to your business, just put the date on that day that you are at the business. Then record all the sales you have made for that day. This helps you to track the sales for that day. I believe that our pharmacies have this in place already, and some even have it, in a more a better way, where they use system to track their sales. But if you don't have those systems where you can track your sales, you can have a book that tracks how you make your sale every day. Then at the end of the day, just calculate all the money you have, all the sales you have made for that day, and total it to give you the sales for that day. Then at the month, you have your sales for the month. Then you have your purchases for the month. Then you have your expenses that you have incurred in that month. Once you have this record intact, you are able to determine if you make profit or not for that month on the spot. So it helps you to track your business activities every day. So moving on to the next slide. So we have the simplified purchase day book. Like I mentioned, when you buy a product from Field, and I think one thing that Field has helped us to do is that we have a simplified way of viewing our payments, like our purchases, right? We have the app that shows you all your invoices at every given point in time, right? So you can just total all those invoices that you have purchased during that particular month and have it as your purchases for that particular month. On the other hand, you can still maintain a purchase record book where you record all your purchases for that month, every of your purchases from that month that has to do with your inventories or what you sell in your day-to-day activities. So this helps you to track all your purchases. You have the date, you have the invoice number of that particular invoice, you have the name of the supplier who are giving you that particular product, and you have the item which you bought, you have the amount, and you have the cumulative amounts. So if you make purchases every day, you should be able to record those purchases in your purchase day book. Then, like I mentioned, it helps you to determine if your profit is making loss, if your business is making profit or loss at every given time. When you have your revenue, when you have your expenditures, and when you have your expenses, because income minus purchases minus your expenses will give you your profit for that particular month. I think this is the end of the slide. Yeah. So are there any questions?
All right, thank you, Moses. Well, just want to ask, are there any questions from this particular presentation? Okay. The hands I see up, are they hands we raised earlier on, or these are new hands? Okay. We're not having questions. I know a lot of persons had questions from the last presentation. It was about the new tax laws. Okay, please, if you have a question as to what has the presentation that just happened now, please, you can just unmute and respond and ask your question. We have like the next 5 minutes to get done with that, so that we'll close. We have the closing remark, and then we'll be out of here.
All right. I'm still Aliblem Ugonna. I want to appreciate Mr. Moses for his powerful presentation. Really, my question is thrown to field chef life at large. It may not be from what he has just said, because I can see that he really details it. And what the question I want to ask, why is chef life app, what's it called, platform only on Google, not inbuilt app that one can access? Because at times accessing Google or the Chrome all the time is a bit difficult. I think there should be a way of personal app. Secondly, in terms of purchase and payment, I can see just recently an account was uploaded. I had it difficult in trying to make payment because it was online payment, and you know the risks of online payment. But if the app is there, it will also help us to be able to make our payments, and it will reflect to our account by creating an account to each and every one of us. And I noticed that during that time I was trying to make purchase and make payment, they were trying to create a more mono account for me, and they collected some of my information. After that process, I was being sent some scam message. You know, this message that once you click it to download, we have heard of several scam people using it to scam people. Once you download it, they will access your account. So the thing keep coming at that moment. So I was like, is it the mono account that wanted to be created and that was not created? Because they didn't create that account with mono. So until the guy asked me to pay through online or through payment, bank payment, which is not from Chef Life. For security reason, Chef Life should have an app, please. It's a very big organization that deserves a separate app rather than going through Chrome. Thank you.
All right, Mr. Ogona. So I know your question is not in the scope of this particular call, particular webinar right now. I just allowed you to actually finish so I don't cut you, but it shows that you are a client in Chef Life, right? And I believe you have a CX person that you can also reach out to, the customer success associate in your own region that will answer some of your questions. But just to see that it is a web app. It's something that you can actually have on your screen. You can actually get it to be installed on your screen, so you don't have to go to Chrome every time when you want to log in. So it's a web app. It's still an app. Not that it's not a Google Play app. Neither is it on iOS, but it's an app. So it's not like it's not an app. It's also an app. But other thing is that you should be able to the customer success associate in your region is going to reach out to you to clarify on any challenges that you have as to the right. So we're going to get your feedback to that person. He will reach out to you. Thank you very much. Yeah, I think we've reached the last part of this webinar. I want to thank everyone who took time to be here from beginning to the end. We've spent a considerable close to 2 hours being on this call, which is something that is truly, truly amazing. It means that this was something that was of value to you. That's why you have to stay here for this length of time. Again, we want to say that we are Chef Life, and what we are all about is growth and access for both your pharmacy, your retail business pharmacy, and your PPMVs. And we are always open, and we pride ourselves as the first company to begin credit for our clients within Nigeria. We pride ourselves on that. Yes, so we pride ourselves in that, and we will continue to serve you better. For those of us that are encountering us for the first time, this is the first time that you are coming to know about Chef Life. It's something you want to jump into because something that will help your business to grow and to expand. That's why we are growth and access. That's something that we're all about, even in Chef Life. So thank you very much. I know Ugona, you said you are in Lagos, I believe. I know you mentioned it earlier when you asked. Okay. All right. So the customer success associate in that region is going to reach out to you. And what's the name of your premises? Let's be sure.
Favor Shuku.
Favor Shuku. Okay. You will get a response from us. Okay. Favor Shuku. All right. Thank you everyone and be on the lookout for us in our social media platforms to get updates as to what we are doing. And I think it's been a great one so far. Let's have a beautiful day. And as we say it, when I used to work in one of this community pharmacy, happy selling, because I know a lot of us are in our business premises at this time. Happy selling. Have a great day. Bye, everybody.